Give me land, lots of land under starry skies above. Don't fence me.
Good afternoon, I'm with Phil Atwan, and Phil is kind of like a butterfly. He goes from investor to investor to investor, so I always count on him for the latest gossip, information, and trends, because he's plugged into the same world I'm into, but it's a different perspective. Sometimes clients are more open with me, sometimes they're more open with you, so I've asked Phil to come in and tell me right now, middle of March, beginning of March 2013, what are you hearing? What's the buzz on the street? What are investors doing right now?
I can't tell you that, Jim, because loose lips sink ships.
Okay.
But for the sake of our viewers today, I will talk. Basically what's happening, really since September, the real estate market has really changed for investors for a variety of reasons. We've noticed over the last 5 years that investors have been taking advantage of distressed properties, REOs, short sales, whatever they can find to put their hands on. That was a good deal. But since September, exponential growth has happened that has caused them to now sell and buy, and they're doing 1031 exchanges for various reasons, Jim. Like we were talking about last time, it's really the same reasons, but sort of on steroids, if you would. Number one, they're buying bigger, better properties to reposition their equities. Why? Because they feel that where we are on this curve or this cycle of the real estate investment market, that prices are going up and they want to inflate with bigger or more properties. They want to protect their equities, but they want them to grow. Second thing is a major issue, as many investors already know about, is basically tax. And what's happening is many of them are looking for new ways to create new depreciation so they can keep more of the income tax that the property is generating for them. Why? Because the government wants more. Proposition 30 really hit investors hard here in California. And also, the bottom line is federal income taxes have gone up significantly. So
if you own a $1 million property versus a $2 million property and you have 10% inflation, you're going to get a much better ride at $2 million.
Absolutely.
That's the repositioning their equity.
Absolutely.
Looking for appreciation.
Absolutely.
And also getting rid of their old depreciation. Right. Getting a new basis for the depreciation. Minimize taxation.
Well, the part that they buy up, they'll get the new basis. Basically, it's a carryover basis that'll be adjusted into the new property. But here's the bottom line. Investors are buying more investment real estate. They're selling and buying. Why? To take the equity, to put it in position to create more inflation for themselves and more cash flow and more write-off.
You heard it here first. If they want more information, how do they get a hold of you?
They call me.
They're calling already.
Already. It didn't take long. Area code 213-479-8800, 213-479-8800, and my name is Phil Atwan with Exchange Resources.
Give Phil a call if you want a second opinion. He's got a good macro view, so tell him what you're doing, what your portfolio is trying to accomplish, and he's a good sounding board for information. Thanks for coming in today.
Anytime.
Great information.
Have a great day.
Let me be by myself in the evening breeze and listen to the murmur of the cottonwood trees.